Greetings, Dr. Jeffrey Scott here. This is my weekend market update for September 3rd, 2023. I'm on the road at the joint IBD San Francisco meetup, an annual meeting with a lot of really great traders. Heard today from Amy Smith and Charles Harris, Lee Tanner, Mike Scott, and others. I apologize in advance for the audio. I'm using my iPad Pro, and they're not as good as the headset that I use when I'm at home. I titled today, Will the Summer Rally Continue into September? Today is the 3rd of September, 2023, at least it will be when I post it. And my email is jeffrey.scott@topdowntrader.com. For those that are new, I've been doing these for, over 20 years. I started doing them for a bunch of my friends and my mailing list. Well, I don't have a mailing list, but my subscriber list at YouTube and other places that I posted has grown. I do this for educational purposes only. Anything I recommend should be taken in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I do not work for any other software platform or trading company. Any tools I demonstrate are tools that I paid for and that I use in my daily trading. And trading involves risk, and you are solely responsible for any investment decisions you make. I do get to speak at the Wealth 365, which is quite an honor. The next one you could see is October 9th through 14th. Here is a URL. I will stick it into the remarks section on YouTube. I'd really appreciate it if you could use my link to sign up. It's free. I don't get any money if you sign up, but not that I compete against them, but most of the other people that speak there have huge followings and mailing lists, and I get to go because Rob's nice to me, but I like to at least show that I try to bring some people. So please do it for me as a thank you for doing these videos. If you like these videos, especially if you're a Wealth Charts fan, I do something every morning when I'm not traveling too much at stocksanddocs.com. Typically I video at midnight on, and it's placed by the team, usually between 8:30 and 9 a.m. Eastern Standard Time. When I do my weekend updates, I like to look at the market because I'm a top-down guy, and you could see under 5 days that the market was strong, led by the NASDAQ and the Russell. So small caps, technology led, the composite up 3.2, the Qs and the Russell 3.7. The broad-based NYSE was up 2.1, the broad-based S&P 500 was up 2.6, and the narrower Dow was up 1.6. You can see here that it was a lighter day except for small caps on Friday. The other thing is, if you look here, everybody except for the IWM is still in a new bull market. The IWM was there, but on this recent correction, they came out of it. We're about to lap the October 13th and before too long, and at which point these numbers are going to reset and start to look differently. This was the last major low that I documented in the markets. If we look at the S&P sectors on the week, you could see that the leading sector was technology and that the laggards were staples and utilities. As I like to say, if this market was about to roll over, don't you think that defensive plays such as staples and utilities might actually be leading? This is it's one of my heads-up displays that I use. This is by Sagar from SuperiorProfit.co, a buddy of mine, and it's something that I have on one of my monitors during the day. Over here, it tells me that on Friday, 8 sectors were up, 3 were down. Now, why is that different than what I just said? Because this is the S&P 500 sectors, and these are the S&P 1500 sectors. And you could see that energy led on Friday. If you look at Friday, 73% of sectors were up, 78% of industry groups were up, and as you could see, 73% of individual stocks were up. So a strong day in the market. And as you can see here, we have 8.5%, I believe that says, it might say 9.5% of stocks are above their Bollinger Bands. We're not overbought yet, but we are getting close to overbought. Now this can change in a heartbeat, and this is an intraday analysis similar to the buckets that I do. Down here you could see that over the week, strong week, 82% of stock sectors up, 88% of industry, 81% of stocks. In fact, the last 2 weeks have been strong. But when we look over the month, there was weakness in the month, and you could see 91% of the sectors were down over the last month, 72% of the industry groups, and 66% of the stocks. Here is another thing that's on one of my screens all day, and this is from Nick Drendel. Very inexpensive, like 50 bucks. Does not require third-party data. And it shows you what the market's doing. You could see the Qs were lagging. You could see where we closed within the range. Everything was in the lower half. We could see that everything is above the 21, and everything except ARC here is above their 50. So that's an improvement. The slope of the moving averages is up. That's an improvement. If we look down here, we could see China oil exploration led on Friday, but if we look over the 5 days, whoops, I guess I can't do that in a slide. You could also rank it and see what was leading. And China, home builders, metal mining, all were very strong on the week. And then if you look at the difference of new highs, new lows, you can see over the, if we look at 1 month, new highs, new lows, we are finally positive on the NASDAQ, and that's really good. And we're firmly positive on the NYSE. So a better market than it may be felt, especially if you're in a lot of technology, as the tech was the weak sector. Rates eased on the Goldilocks economic data. I think things came in perfect on the week, and it even had people talking about maybe there isn't another rate increase and accelerating when the Fed will do the first cut. But you could see both the 10-year on the left and the 30-year on the right came in a little bit. You could see minimal moves up here. And you could see when they turned down, the S&P in yellow turned up. Do we have a recession or not? We just had a great dinner. I talked with Jerry Salmon, a bunch of others. And, I think most of us feel that we are going to see a recession, but maybe it's delayed. Maybe we've already had it. But most of the talk was about, is the big reset coming and when? Not that we think it's anywhere short term, but if you look at the 10-2 and the 10-3 yield curve, if you go back to the 80s, when you get an inversion, you get a recession. Well, we've had the biggest inversion, especially in the 10-3, that we've seen since the early 80s. And it's hard to believe that that doesn't ultimately cause a recession. As I said last week, you're never wrong saying a recession is coming as long as you don't define the time frame, because recessions happen. Down here in the lower left, I move things around or I put things twice. Bummer. I was supposed to show you this one to be credit risk, the Bank of America yield, looking for what risk there is, and there's not much credit risk, but this is the wrong slide. And then the Philadelphia Diffusion Index is turned above 0, which says economic activity is fine. That might be the argument that we don't see a recession. Breadth improved. You see stocks here above the 200, stocks here above the 40, turned up, but nowhere near the top where you expect reversions to the mean in the markets. And then the T2121, the 13-week new high, new low, which I track very closely, is in pretty much neutral territory. So nothing that says we're extended so much we're going to switch. Looking at the buckets and edge rater, again, you could see 9.5% of stocks are above their Bollinger Bands, but that's not that high. You can get to 20, 30 or more. And you can also see that 62% of stocks in the S&P 500 are above the midline, which is mildly but not overly bullish. This is interesting. On the Hindenburg, there's not going to be a Hindi signal. But notice that on the NASDAQ, we're still seeing a lot of new lows. Now, we did see some new highs pop in. And you contrast that to the NYSE, where over the last week or so, there have been no new lows and mostly new highs. So still a divergence between the NASDAQ and the NYSE, and those new lows are concerning, and I'll continue to watch them. Now, if we look at the week we just had, you could see all the different buckets, which would be ERG, EPS rank plus relative strength rank plus group rank. Each of them are 0 to 99, so you could be as much as 297. And if you look at ERG, and you look at performance for the week, you could see using the ERG calculated on the prior Friday after the close, all the groups were up, although it's interesting, low ERG and high ERG led. Over here are a number of different groups that I monitor. I don't show this all the time unless it's obviously one way or the other. And this is a bunch of different lists, my holdings, IBD lists, and others. And you could see profoundly black, meaning except for the prior week Bible gap ups, which is an automated scan in HDSI, all the groups traded positive. Now, earnings per share rank was good, but having no earnings wasn't so bad. Low relative strength stocks, such as stocks you would see coming up if there was a market rotation, actually outperformed. And the groups that were previously weak actually lagged. The stronger groups led. So, strength begot strength, although there's still some evidence of rotation with some of the things off the bottom. Know your news and earnings. Look at Thursday. 1, 2, 3, 4, 5, 6 Fed speakers. Then you got Mary Daly, number 7 on Friday, and there could be more. That's a lot of Fed speakers. On the news front, you got some PMI and ISM and a beige book on Wednesday. Obviously got the holiday Monday, factory orders on Tuesday. We got jobless claims on Thursday, and then on Friday we've got some inventories and credit. If it wasn't for the speakers, I'd say it was a modest to low news week, but with that many speakers, it's not a low news week. It's important to know what earnings are coming, because as I looked at charts this week, Trip.com made it to my list, GitLab made it to my list. Looking through what other things made it to my list. Sprinkler looked interesting. American Eagle Outfitters looked interesting. C3AI has come down quite a bit, not on my list. Restoration Hardware, Braze, all made it to my list. And it's important that I know that because, frankly, I'm not likely to take stocks as a long position when they're on this list and they've got earnings. But what I say down here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So market thoughts, this is kind of wordy. Fairly strong week for stocks, decent gains, broad gains. Buying on weakness, aided by a big drop in rates. There wasn't a lot of conviction on the part of the sellers, and volume was below average. Mega caps took charge, benefiting from the drop in market rates. The Vanguard mega cap growth rose 3.6. The RSP rose 2.3, both strong, but outperformance on the large caps. As I showed you, we have lots of Fed speakers with some news this week. It'll be interesting to see if they talk down the risk of the next rate hike or talk up. News flow is slower, but we do get the beige book, jobless claims, and PMI. Hard not to be leaning bullish here, especially with the drops in the 10-year and the dollar. But those are the ones I'm watching, the 10-year and the dollar. And when they start to go higher, I'll get a lot less conviction. So I'm mostly long. I've used up much, but not all my cash. I've avoided margin because I still think this market is risky. I have a tight leash with stops and smaller positions. My timing model says it's okay. The Qs are the one that's borderline. It's not flashing yield, it's flashing yellow. And this does keep my conviction a little bit lower. So again, if you like these videos and you want to support me, I don't charge for this. I'd love it if you would register for Wealth 365 and use my link, which will be in the YouTube remarks section. And again, please join me at stocksanddocs.com. They will ask for you to consider giving your name and your email. I don't get access to that list. Frankly, I wish I did, so I can invite you to things like the live webinar that I did this past Wednesday and where I introduced some new tools. But it's okay with me. I'm just helping people trade. And those videos by design are 5 to 8 minutes, so very quick video compared to the longer ones like this that I do on the weekend. So let's jump into wealth charts, which is, I'm going to use the platform for this video. So when we look at wealth charts and we go back to Friday, we had a gap up at the open, and then the markets just lingered lower the rest of the session. And if you look at where we closed higher than the prior close, but well off the highs. And you're going to see a candle that should have topping and bottoming tails. And let's take a look at the daily spider. And there's a small topping tail, small bottoming tail, and we closed in the lower part of the range. Is that a bullish candle? Well, it's not that bearish. We're still in a nice uptrend here. In fact, this is a nice angle of attack especially if you go back here, you put some type of a mean reversion line or linear regression. That's a nice angle of attack. We're decidedly above the 50. The 50 is still rising. The 200's rising. We're positive on the MACD. You know, the weaker days had lower volume after the follow through day and the big up day we had here. I don't consider this a bearish chart. I think it's more of a consolidation and pausing. Let's take a look at the rest of the market. So the spiders, we know we're up a bit, 0.19 on Friday. If we look at the Qs, you know, again, it's a not a great looking candle, only down 0.11. It opened up higher, closed a little bit lower, not quite a bearish engulfing candle. Something to watch, and that's the least strength. But again, you're above a rising 50, above a rising 200, and the volume, especially on the weaker days, was light. When you look at the diamonds, let's get to the daily chart. You know, ugly candles, 2 in a row, up a little bit on Friday, down 0.5% on Thursday, bouncing on support at the 50. So all three of these on top are above support. And, you know, how can you be bearish with that? Now, I guess the good news is on Friday, the Russell, which was the leader, broke above this line here, which was the 50, as well as anchored VWAP to the 21, 22 highs. And this is the first time we've been above it since the 14th of August. And this is one that I was worried about, but this is actually quite bullish. And notice the one that had the most bullish candle had the most volume. If we look at the VIX, let's see if this will reflect. Yep, the VIX sold off on the week as the markets were strong. If we look at a weekly VIX, you can see it was down 16%. You know, as George Lee would say, when the VIX is low, look out below. So the question has to be is how much lower can this VIX go before the market, gives a reversion to the mean and the markets come down. This is the worrisome chart. You can see the dollar had a huge session up 0.62, and I think this is something to worry about. If we go back during this recovery, this is March of 2003. We have to go all the way back here to November 2003 before we had significantly higher US dollars, but this was an area that we hoped would hold. It did not hold. So I think one of the things that will be telling of what the market does is the USD, and right now it's a little concerning. Strength in the dollar and the fact that we have some overhead resistance just above on the commodities. Let's see if they'll come on up for me. Come on. Not with my home internet. Well, we'll come back. Not sure why they're not. Here they come. My giga internet at home. Let me just do this. This is weird for them not to go. So let's come back here. Let's do this. Reload. Let's go back to the commodities. All right, there we go. Yay. Didn't want to have to start this over. Okay, loading up my tasty. So you could see with the strong dollar, gold gave back some, although it finished up a little bit, but you see it sort of creating a little flag here. You're getting a flag on silver. Oil continues to run away, and that's out here where we saw gas at $6.50 in San Francisco. Another reason why I'm glad I live in Florida, where gas is still about $3.50. Natural gas is flat. And then if we want to pick another concerning factor is the 10-year had a nice rebound on Friday. So that dollar and 10-year, if they start going up, is not going to be good for the stock market. And if we look at the weekly, you can see the 10-year had a failure at this line here. That's great, but let's see if it stays below it. Certainly would like to see the 10-year and dollar get below their lines in the sand. The weekly market timing signal, we'll take a look at that. And after many days of selling off, I think we're probably ready to start changing. On the spider, we're above the 30-period moving average. The weekly bond goes green. So what that tells me is it's time for something to go. So I think it's time to give a buy signal on the spiders. On the Qs, not yet. I'm going to leave the yield sign on. We're well above the 30-period moving average. This is weekly charts, but the weekly bongo is still red. On the Russell, especially after the big move on Friday, we're ready to go back to buy mode. And so that's an improvement above the 30, and the bongo's green. And the diamonds never reverted out. They never closed below the 30, and their bongo turned green again. So more green bar arrows up than yield signs. So I would say we're still leaning to the long side. If we look at the sectors to see what's working right now, let's see if these will work for me. Here we go. Yeah, at home I've got Gigafiber, and I'm on hotel Wi-Fi, which is nothing close and to what I have at home. So let's see what's working. As I said before, if I thought the market was going to die, I would think staples, real estate, utilities, and maybe healthcare XLV would be leading. They're not. In fact, look how bad utilities and staples are. Technology is doing well. Energy, materials. So, and financials look like they were doing okay, and they're really in the middle. But I think the most remarkable thing is how poorly staples are doing. If we go into my stock scanners, and let's go to the heat map, and let's look at the S&P 500 to start today. And that'll give us a sense of what Friday did, and lots of green. But if you look at the big cap tech, Tesla, Nvidia, Google, Broadcom, which was down a lot, 21 points. Amazon were red, but there was plenty of green in the markets. And as we know, the S&P 500 actually finished up, although only up a little bit. Let's take a look at Wealth Scanner and see where the strength is in the market. So we're going to look for really three things. We're ranking them by the wealth score, which is sort of Rob Hoffman's way of looking at relative strength. We're looking at arrows telling me what direction it's moving, and we're looking for flames if something moved a lot to the upside, which I don't see anything there. Now, the factor above 800 is great for pharma, which is interesting. At the same time, and maybe it's buy on the rumor, sell on the news, or in this case, sell on the rumor, buy on the news. There's a lot of concerns in pharma about drug price negotiations with the U.S. government as a result of the Inflation Reduction Act, the IRA, and that the new drugs were announced this week of who were going to be under attack. And they're all big pharma drugs, so it's pretty impressive to see big pharma doing so well. Followed by oil production, energy, technology, insurance, momentum, and we're starting to drop down. In a strong market, everything on this list will be above 800, and we'll have many that are 850. But the market's definitely improved. Let's take a look in the CAT scanner. So this is my tool, and it's an option to purchase within wealth charts. Let me just reset the columns. And I basically have created a tool looking for the types of signals that I like. The dots represent four different impulses or signals. It represents gap, volume, momentum, and breakout. So I want to find stocks, a particular pattern. I want stocks that are in an uptrend, that pull back. So here's your uptrend, and there's a pullback. And you can see my proprietary indicator. I developed a bunch of friends called the Bongo. Went from uptrend to downtrend to uptrend on the daily, while the weekly and the monthly show a consistent uptrend. I want to see my impulses hit, which is the gap impulse, the volume impulse, breakout, and momentum. And I want to see the relative strength compared to the spider go up, OBV go up, but I don't want to see them extended, and anything above plus 95 or below minus 95 tell me that you're extended to the upside or the downside. So I built a scan, and the beauty of this program is you can make your own scans. So I look for my price and volume, 5 and 350,000. I want options. So options liquidity is not very liquid, but it tells me that at least there are options. I want to have at least one bullish dot, no bearish dots. I'm looking for that pullback to have occurred within 9 daily bars. And I'm looking for today to have the daily bongo be green and the weekly bongo green. And I run that scan every day against my buy watch list. I call it the combo leaders list. and the stocks will come to the top with the highest number of dots. Now, you notice Dell, which I said is extended. I could have told you that because the high-low jump here was at 100%. Lululemon, also a beautiful move. These are all on earnings. Somewhere in here will be the earnings, and you'll see 5% beat. So here's a stock that, look at the weekly. It's clearly in an uptrend, although it's been going sideways for several weeks. And what happened on Friday? Lots of volume for 2 days in a row. Gap, volume, breakout momentum. You came out of a squeeze. You had a PSAR reversal. Relative strength and OBV are strong, and your high lows at 67. I like Lulu. NTNX is another earnings story. Now you're going to lose the fourth dot here because you close below the midline. Big gap up. Not a great close, but still well above the open. On massive volume, relative strength and OBV with breakout momentum coming out of a squeeze. ARCB is a trucking company, and this one I like probably a little bit more. Why? Because uptrend, pullback to the 50, which taught by Ian Woodward we would call free parking. Good volume, breakout momentum. All three bongos are now green. Relative strength has turned positive, and OBV has just peaked itself over its moving average. This one to me is a lot easier to buy than Lulu, and the reason is simple. I can put let's open up the data window. It's here somewhere. And if you look over here, the high is 112.39. That 50-day moving average, see, the close was 110. The 50-day moving average, which is at 105.09. So I'm going to risk $5 or so on a $110 stock, so between 4 and 5%. And I can put my stop under that 50, which is going to be a pretty good place to put a stop considering how it's been support on this move up. I'd much rather do that than look at something like Dell. And with Dell, I'm going to have to put my stop either 8% below where I buy it at or less. Midline of the bar, the bottom of the bar. But when you have a move like that, it's going to be hard to be in a short range between within the 6 to 8% at max and feel good about my stop. That's why I like buying pullbacks. There's usually a natural spot place that I can sometimes get away with 2 or 3%. A10 Networks, don't remember much about this stock, and that's because I would have skipped it. It's below the 200. Halliburton, sort of them and Schlumberger are the granddads in oil services. I can tell you when I looked at my 1,000 charts today, the ones that really stood out to me were stocks in energy, such as Halliburton, such as Devon and other producers, such as ConocoPhillips, and even some of the midstreams. So energy where it's at, and what a beautiful pattern. Uptrend, pullback to support, big volume the last several days, breakout momentum coming out of a squeeze, and relative strength and OBV coming in line. Liberty Engineering, or I don't know if it's energy rather, is another services stock. Same thing, pullback, breakout on volume, breakout momentum out of a squeeze with relative strength and OBV. MDXG is a healthcare stock, a medical technology company. And look at this, same pattern, uptrend, pullback towards the 50 and a breakout. Volume up the last 2 days with breakout and momentum in a squeeze, relative strength and OBV look good. How great is this tool? I designed it to identify the type of stocks I want to buy. I know what's working from my sector analysis, and here they are, the stocks in those leading groups come to the top. MUR, oil exploration, I think they're the ones that are at Sam's, and the gas stations at Sam's Clubs. Look at this beautiful move. Where's the 62%? Now, the math on this is taking the price and comparing it to the 17, to the 50, the 200, adding up the distances and comparing it to the greatest distance going back a year. And when you get 95% of the greatest extension, usually it's because you're not going to get extended much more. So really like what I'm seeing here on MUR. NRG is a utility, power generation, sideways move and a breakout off the 50 and the 17 with momentum, volume, relative strength, and OBV. I made a comment at dinner. I saw a lot of stocks. Each one of these is interesting. PSTAG, this is a storage company. I'm not sure exactly what they're doing and how they compare to Seagate and Western Digital, all of which are also strong. But look at this sideways move and a breakout. You know, this has been in chop for so long, I probably want it to clear a little bit more so I know that it takes out the recent highs, but it's only about 60 cents away. I can just keep going down the list. Patterson P10 is another one of these oil services. How many times will you see the same pattern? Uptrend, pull back to the 50 and a breakout. Had big volume on Thursday, less on Friday, but both were strong days. PXD is another producer. This is a big one. Sideways move and a breakout on massive volume. Breakout, momentum, volume, relative strength, and OBV. It's not been very common over the last several weeks to go through a list and see so many strong stocks. One that's really fundamentally strong is Warrior Met, which is a coal company. Again, hard to believe we're into coal, but this one's breaking out as well. The big daddy in coal, which is the one that I've been playing, is Consolidated Energy, and you can see what kind of a run this has had. Almost starting to look like a tech play or AI play, which means I took profits on it. But what I really did is I just moved up the strike price on my calls, and I sold some things up high to fund the roll of the calls so I could take some profits out. But this was one you could see where I got interested in it. You had a bit of a flag, and you had a breakout here. So it's gone from 83 to 90 bucks in 14 days. So that's not a bad move, 9% in a couple of weeks' time, and looks like it wants to go higher. Did the same thing over here, and frankly, the same thing over here. So there are a lot of things to buy there. CRC is another oil exploration play, breaking out to new highs. So I think I've probably shown you enough for today. Let's take a look at my buy watch list and see if there's anything else that I saw there that'd be worth telling you. Now, typically my buy watch list will have 40 or 50 stocks on it. And what I do is I stick them into a radar screen and watch them closely over during, when I can in the market, and certainly follow them each night to see if anything is making its move. So just because they're on a buy watch, it's a watch, not a buy list. And if we look at it, we just go through and see if there's anything that was really outstanding. You know what? This looks like last week. So let me pause it and update it. Okay, I updated the list. ACMR is not a buy today. This is one that we talked about not long ago. Uh-oh, don't want to see that. This is one of those days. Let me do this, a reload. Go back to watch list. Go to my buy watch. So you could see this is one we talked about a week ago, and a pullback. Look at the volume that came in, a pullback, and it broke out. Probably too far, looking for a pullback. If you believe in Santa Claus, then maybe a firm, which looks really great there, but this is a stock that has dropped from 175. It's having a beautiful run, but it's still, heck, 90% or more off of its all-time highs. Really a tough place to, it's just bad if you're holding it. Simon, who's one of my colleagues, from much higher amount. Allison, this is an old name, but look at this beautiful breakout this week. I know some people that went long into that. APP App Lovin'. The fundamentals on this thing are to die for. If you look at earnings growth coming into the chart, looks like this one's going to continue running. I'd rather buy it on a pullback, but that one still looks good. Again, I'm just pulling out stocks that I like. Breeze is one that had a nice breakout. This one's got earnings coming up this week. CCJ, there are countries in Europe that are talking about turning back on the nuclear because of the energy stuff. this things will just keep going. But again, it's hard for me to buy. I like the pullback here, the flag, and taking it on the breakout above the flag. Conoco was one of the integrators that I liked. Sideways move and a breakout. DNOW is another oil services company. Kind of loosey-goosey, not as pretty as Halliburton, but sort of a pullback, sort of a volume contraction in range, and then a breakout taken out to 200. ESTC had a big breakout on Friday, so I'd have to know more about what's going on. But that one had a big move, also well off its high. So even though this is a big move, it's certainly not to the point where you expect it to not go any further. Volume, breakout, momentum. Look at the relative strength in OBV, but alas, it's at 100 on the high-low jump. A lot of things. GTLB, GitLab looked interesting here, breaking above the 50, but it's got earnings this week, and that's not something that I like to change. Hubs, kind of a shallow. See if I make this a little bit more of this. Pullback, kind of a cup here, trying to break out. So the point here is there are a lot of good looking charts. IoT, this one on new earnings is moving. This is a stock that, let's see the earnings here, beat by 150%. This is a stock that was not a fallen angel, but it dropped from 31 down to 21, but it looks like it's running again. Many of these I've shown you already. Look at Melly. This thing just keeps on going. A South American eBay, Amazon-like company. See if there's anything else before I say goodbye. Warren Buffett has to be happy. Oxy has finally broken above 60. Not my favorite of the energy stocks, but you got to figure with Warren Buffett wanting to buy more and more, there's some kind of a put under that. PSFE is a stock I don't know that looked interesting. It's got some earnings coming in. I just don't like buying things below the 200, but I want to watch it. What's SMCI going to do? This is one of the fallen AI plays. Is this going to go back and challenge highs? I want to watch it. That's why it's on a watch list. Upwork, sideways move. Is it going to break out of this area? I want to watch it. That's why it's on a watch list. And last, I think WTTR, breakout, sideways move. Looks like the last one. That still looks like Upwork. Boy, there's problems with the internet here, as you could see. Here it is, sideways move and a breakout. I like that. It still looks like Weatherford. So I think that I'm not going to look at it anymore because I'm having data issues. So I think I made my points. The market has improved over the last couple of weeks. When over a month, the more stocks and sectors in these groups are down, and the last 2 weeks they're up, it means you've got strength coming in after the market had weakened. I haven't had this many attractive looking potential longs in quite some time, and that makes me feel more bullish about the market. And when I looked at my 1,000 stocks today, it really showed me a lot of positivity in this market. So I am cautiously optimistic that we move higher. I am not ignorant of the fact that it's also September, which is a tough time. But I like being objective. And my objective is, as long as the close is above the 30-period WMA and my weekly bongo is green, I am more long than short. The only one, this is supposed to be, I reset without changing it, dummy. So that one's still, this one's now a new buy. So I have green on 3 out of 4. The fourth is caution. So conviction, higher than it was, but still not great. Leaning to the long side, short leash, and don't forget it's September, and have an awesome week. Thank you.